Hey guys, welcome to Insurance Edge, and if you're new here, what we do at this channel is provide tips and tricks on all insurance for contractors in California. Now, some of these tips are able to be helpful to other businesses outside of California, but our bread and butter is going to be those contractors. So if you're a contractor, be sure to follow along. A lot of these tips are very important to ensure you are paying less premium than your competitors. Be sure to give us a call as we have some exclusive tips for our clients to give them an edge over their competitors. This is very important because if you're able to get lower overhead than your competitors, that means you're able to win more jobs, which will provide much more income than just the savings on your insurance. So be sure to follow along, give us a call if you got any questions. Now, getting straight into it, this video is going to be on how to read your workers' comp policy, and more specifically, your declarations page. At the very top of the first page, it is going to list the carrier name. This is very important as you need to know exactly who is insuring you. It should at least have the company name as well as their address. Secondly, on this page, it needs to list all of your company's information. It should have the named insured, which is your company. It is also going to have your guys' mailing address and your EIN, which is your tax ID number. This information is all very important. Anytime that there is an entity change, an address change, or your EIN changes, be sure to let your broker know in order to get it updated. It's going to make it much easier on the audit, so you're not having to do it as the audit comes in. Next, it should show your effective date on the policy. So this is the exact time that the policy starts and when the policy is going to end. Most of the time, this is going to be a year policy. So it could be from December 1st, 2024 to December 1st of 2025, or whatever it may be. It is very specific, and it's also very important because if you have a claim a day after or even a few hours after the policy ends, that claim is not going to be covered. So it's very important as when you are getting lapses in coverage, as if there is any claim during that period, you are going to have to pay it out of pocket. Additionally, the state is going to see that you had a claim and you did not have coverage, and they are not going to be happy and could possibly suspend your license for it. After that, it's going to get into your policy limits. This is going to depend on the state that you are in. For California, they require it to be a $1 million policy. So what that means is that any policy that you have in California at least has to be $1 million of coverage. You can go beyond that, but again, the bare minimum is $1 million. And lastly, on this first page is going to be the minimum premium. This can be very pertinent for smaller contractors. As you are getting started, you may not be having tons and tons of payroll as you just get started. So the minimum premium, what that means is the minimum that you have to owe for this policy. So say that you start your policy and you have 2 full-time guys, and then halfway through the policy, work slows down and unfortunately you have to let them go. You still have this workers' comp policy, but since you have this minimum premium, in this case it is $2,000, if you only paid $1,000 of premium for the year, that means you are still liable to pay that other $1,000 throughout the rest of the year, even though you no longer have employees. So if you're a very large company, you're paying $20,000, $30,000, $40,000 of insurance a year, it's not going to be as pertinent to you, but for the smaller guys, it is important to know. Now, as you keep scrolling through your declarations page, you should see a chart. In this case, we see 5 separate columns. This is very important as this is how your rates are going to be made up. So we see these 5 different columns. We see the class code, we see the description, payroll, net rate, and the total premium for the year. This is the most important aspect of your policy, as this is, at the end of the day, what you're going to have to pay in order to have this policy. Now, to break it down, a class code is a numeric digit that correlates to a scope of work. Now, the first class code that we see on here is the 5403. On the left-hand side, we can see that this correlates to carpentry under $41 per hour. That is very important because, again, it specifies this is for employees that are doing carpentry work who make under $41 an hour. So if they're making $41 an hour or more, it is going to be listed under a separate class code. As we see right below, this 5432 is the opposite, so carpentry over $41 an hour. So it's very important distinction, and sometimes giving your employees a $1 or $2 raise can impact your workers' comp premium heavily. So it's always a good thing to talk through with your insurance broker on understanding these rates and potentially increasing your employees' hourly rate in order to save more money on workers' comp premium. Now, after that, on the right-hand side, we are going to see the payroll. So this is how much payroll you run in each one of these class codes. So again, in this scenario, we have $50,000 of payroll in the low wage carpentry work. So again, this could be broken up between the $50,000 to $20,000 in painting, $10,000 in landscaping, however it may be for your company. But again, this is how your workers' comp is going to be rated. Everything is rated off of the amount of payroll that you run for the year. After that, on the right-hand side, we see the rate per $100 of remuneration. This is ultimately the rate that you are going to pay, as the name implies, for every $100 of payroll. This is how your premium gets calculated. So in this case, for the $50,000 of payroll that they're estimated to run, they are going to owe about $18 for every $100 that they run. Here is the formula on screen now in case you are interested and want to calculate your own estimated premium for the year. It's very important as you're bidding on jobs, and again, the lower rate we can get means less overhead for you. So it's very important and could end up winning you that job. Now, additionally, as you scroll down, it should show tons of line items. This could be an entire video on itself, but this is ultimately how your specific rate got calculated. There are many different credits and debits that are going to your company based off your location, your claims history, and the carrier's appetite. It can also be your guys' experience and how many years in business you've had. So all of these factors will impact your rate, which is very important. But additionally, there's one specific line item on here that is very important. We see it on here as the waiver of subrogation, or a blanket waiver. This is very important as many jobs will require you to have this form of coverage. As we see, it will cost you 2% and it will add 2% to those rates. But again, it is very important. You never want to lose a job just over a certificate of insurance. So it's very important. Always add this endorsement onto your policy if you have many certificates going out. So in short, that is a breakdown on a workers' comp policy, or also known as a declarations page. If you have any questions, feel free to drop them down below, or check out some of our other videos on a detailed guide of what a net rate is and how to save additional money. Again, be sure to give us a call. We have many tips exclusively for our clients to give them an edge over their competitors, so be sure to give us a call.